The Federal Reserve's final policy meeting of the year is this week, and it could be a historic one as economists and investors expect the central bank to announce a rate hike for the first time in nearly a decade. For more, we go to Jerry Webman, the chief economist at OppenheimerFunds. And Jerry, welcome back. Good to see you.
Always glad to be here, Scott. Thanks.
So give us a sense of what we should expect in this meeting on Wednesday, presumably this big rate hike.
Well, big, if 25 basis points is big, I guess it's infinite in proportion from zero. You know, what everybody's going to want to watch closely is what the commentary afterwards is and how the press conference goes.
Because we should get some information on the pace of rates after the initial one.
That's what everybody's counting on, that this is going to be a rate hike and then a series of shallow or slow or maybe infrequent rate hikes through 2006 into 2007. Fed doesn't know what that pace is going to be. We don't know what that pace is going to be. She's going to tell us what we're looking for.
Because she doesn't want to scare the markets if she does raise rates.
So you want to, exactly. And I think in a way you might scare the market if you don't raise rates this time. There's so much anticipation that if they don't raise rates, we're going to say, hey, what do they know that we don't know? What's the weakness here that we aren't counting on?
But it's turning out to be an interesting couple of days because, of course, we had oil fall below $35 a barrel. The markets went haywire on Friday. The Dow down 300 points. Could some of these factors derail a rate hike on Wednesday?
Well, you know, the line is data dependent, not market dependent. So they're going to try not to appear to respond to what specific markets are doing. I think there was some criticism in September, October, when they didn't raise rates, of watching markets more than they're supposed to, as opposed to, you know, the longer term stuff in the economy.
And it's going to be really tough for the Fed to find that perfect week to raise rates.
Well, it's not. There isn't a perfect time to do it, and it's probably not urgent to do it. Their fear, I think, and you can hear this sometimes between the lines, is we're really worried that we've disrupted something by keeping rates this low this long. We've got to get this thing toward normalization.
Although it's interesting because investors are now pricing in a 79% chance of a rate hike. Now, last week at this time, it was 87%. So you have some investors out there saying this slide in oil could, delay the Fed a bit.
But before the October meeting, it was about a third. It was about a 30% probability, which was a pretty good bet. I would have taken that bet, and it wouldn't have been bad to be on the losing side. So that's a very high number. If it slipped a little bit, that's jiggling in that forward curve. But
yeah, we'll be watching.
We'll be watching for it.
Let's also talk about inflation. That is certainly one thing that the Fed keeps saying will creep back up towards its 2% target. Of course, we haven't exactly seen that. Do you think they will reiterate that same stance on Wednesday?
I think they've got to say that they think in the medium term it moves toward their target range. It's hard to find any reason to think that that's going to happen. I mean, listen, wages are a little better. Retail sales last week, apart from gasoline, were pretty good. So you're seeing maybe a little bit of them. We'll watch for pricing power. I don't see great sales this year as I've kind of walked around the city yesterday. I don't know if that's an indication of anything whatsoever. But we'll see if maybe businesses are able to sustain some pricing.
Yeah, let's talk quickly. Of course, it's an election year next year.
That. Yeah, right.
Anything to say on how higher rates could impact, the election or whoever, wins the nomination on either party?
The opposition party is going to criticize the Fed no matter what the Fed does. It's part of, running for office. You criticize whoever's in office now, so you'll hear some of that. I don't think, the market will determine the economy, more to the point, the economy determines the election, not the other way around. So the out party will do well if the economy doesn't. So that's what we'll be watching for.
All right, Jerry, it'll be an interesting week. Always great to see you. Thanks for stopping by.
I'm glad to be here. Thanks.
I'm Scott Gamm, and you're watching The Street.